Aneeka Gupta joins us now, equity and commodity strategist at WisdomTree. Aneeka, this is a fast-moving market, particularly on the bond market this morning. What do you make of these fears, as it seems as though investors are climbing a wall of worry around monetary policy?
That's true. We're seeing a very, very wide divergence in monetary policy. From the two largest economies in the world, you're seeing the US being a lot more hawkish than previously anticipated, while you're seeing China take a complete U-turn and try to do everything possible to stimulate growth. And I think investors are trying to navigate this path as how it's going to actually play out in terms of earnings, which we're looking forward to, for Q4 of 2021.
The challenge, though, is as you look at the emerging market opportunity, what will drive a recovery in sentiment towards emerging at this stage, and even China, given perhaps some of the policy uncertainty we've seen over the last 2 years?
It's a very good point. I think until now, China's stance was very much about realigning the economy away from real estate and into more productive sectors such as agriculture, technology, and lowering their dependence on the West for energy. I think China has finally realized this is going to be a more long-term process, which could not be solved in a time frame of a year. And I think now they've really changed their stance. They're now going to be a lot more accommodative. We've already seen, them inject some liquidity into the market. We've seen a rate cut yesterday. And I think that is going to be the first precursor to change sentiment around emerging markets, because I think last year the regulatory hurdles coming from China were a big headwind for sentiment towards emerging markets. And we believe that's likely to change in 2022.